For decades, the US government has been a regulator, a rulemaker, and an occasional grant provider. But now we're witnessing a major shift. The government is becoming a direct investor in the stock market. The Trump administration isn't just handing out loans anymore. It's taking ownership. It's buying shares in American companies, reshaping the landscape of our industry and national security. This isn't just economic policy, it's a quiet revolution. In this video, we'll explore the how, the why, and what it means for your investments in our nation. To understand this shift, we must face a sobering reality: strategic vulnerability. For years, critical supply chains have moved overseas, especially to China. Take semiconductors, for example. The US designs the best chips, but only makes 12% of them globally. The rest come from Taiwan and South Korea, creating a massive geopolitical risk. And what about critical minerals? China controls over 80% of global rare earth processing. These minerals are essential not just for tech, but for military hardware too. The US was almost entirely dependent on imports, which became a bipartisan concern. The CHIPS Act was a first step, offering $52 billion in incentives, but it wasn't enough. The current administration realized we need more than influence. We need skin in the game. So how does this work? The government isn't buying shares like you or I would. Instead, it's an equity for funding swap. Using Intel as an example, the Department of Commerce awarded a $10 billion grant under the CHIPS Act, but part of that grant was converted into a 10% equity stake in Intel. Now, US taxpayers own a piece of Intel, and that stake will rise and fall with its stock price. And Intel is just the beginning. Let's look at the full portfolio. MP Materials, the only significant rare earth miner in the US, gave the government a 15% stake after receiving funding. Lithium Americas, crucial for domestic lithium for EV batteries, also gave a 10% stake to secure resources. Trilogy Metals, a small mining company, saw its stock soar over 200% after the government announced its stake. With US Steel, the government took a golden share, giving it veto power over mergers and acquisitions. The message is clear. If your business is critical to national security, be ready to share ownership for government support. The immediate impact of this policy has been nothing short of explosive for the targeted companies. We've already seen the stock pops. This creates a self-fulfilling prophecy. The government's vote of confidence attracts a flood of private capital. JPMorgan Chase, for instance, announced a $1.5 trillion initiative to invest in these exact sectors. The rising tide of public and private money makes these companies stronger, faster. For a company like Intel, it's a game changer. That $10 billion, plus the government's seal of approval, accelerates their plans to build state-of-the-art fabs in Arizona and Ohio by years. It's a direct shot across the bow of TSMC and Samsung. But there are profound consequences and risks. First, the losers. Foreign investors, and particularly Chinese firms, are now completely frozen out of these strategic sectors. The golden share in US Steel is the ultimate poison pill for any foreign takeover. Second, the moral hazard. Is the government, as a part owner, going to make these companies more competitive or more bureaucratic? Will it pressure them to make decisions for political rather than economic reasons, like keeping a less efficient factory open in a key congressional district? Third, market distortion. The government is effectively picking winners and losers on an unprecedented scale. A tiny mining stock can triple overnight based not on its earnings, but on a government press release. This creates a new kind of risk and opportunity for investors. So, where does this go from here? This policy is not a one-off. It's a blueprint. Based on the pattern, we can predict the next industries and even specific companies that are likely in the crosshairs. First, defense prime contractors. The most logical next step. The Commerce Secretary has openly stated that the administration is considering buying stakes in companies like Lockheed Martin, LMT, and Northrop Grumman, NOC, arguing they are basically an arm of the US government. This would be the ultimate expression of this policy. Second, nuclear energy. The administration recently issued an executive order to fast-track new nuclear reactors. The entire nuclear fuel cycle is a matter of national security. Watch companies like Cameco, CCJ, a leading uranium supplier, Oklo, a developer of small modular reactors. They are prime candidates for government equity stakes to build a sovereign nuclear fuel supply chain. Third, advanced batteries and energy storage. We have lithium mining covered, but what about the battery cells themselves? Companies working on next-generation solid-state batteries like QuantumScape, QS, could be targets to ensure the US leads the EV and grid storage future. Lastly, artificial intelligence infrastructure. It's not just the software. The physical infrastructure for AI, the specialized data centers and hardware, could be deemed critical. This could pull in companies far beyond the typical tech realm. Financial analysts at firms like Morgan Stanley have already created a National Security Index, a list of dozens of public companies in these exact sectors that fit the government's new investment thesis. What we are witnessing is the formation of a new American industrial complex, a deep, permanent financial partnership between the state and strategic private companies. This isn't the government steering the economy from the outside anymore. It's in the boardroom. It's on the cap table. The goal is monumental: to reshore the most critical supply chains on Earth and build an unassailable technological moat against geopolitical rivals. For investors, this creates a brand new playbook. It's no longer just about PE ratios and earnings calls. It's about understanding national security strategy and positioning yourself in the companies that are deemed too critical to fail. The risks are real, from bureaucracy to market distortion. But the potential reward, its proponents argue, is nothing less than securing America's economic and technological sovereignty for the 21st century. The government is no longer just the referee. It has put on a jersey and is now a player on the field, and that changes the game for everyone. What do you think? Is this a necessary strategy to counter China, or a dangerous step toward a state-directed economy? Let us know in the comments below. And if you want to see our analysis on which specific national security stocks we're watching most closely, make sure to like, subscribe, and hit the notification bell.